After years of rapid expansion fueled by state subsidies and aggressive price cuts, dozens of Chinese EV makers now face a tough reality. Mergers, consolidation, or shutdown could be the central theme for the industry in 2026. Cash is drying up, government support is fading, and only a handful of big players are still making money. China's electric vehicle industry is now showing signs of strain. After central government subsidies ended in 2022, many weaker EV makers survived only because local governments stepped in with indirect support, including preferential land deals, financing, and procurement. But that lifeline is now being cut. China's new 5-year plan signals a shift away from propping up small and unprofitable players, with policy focus turning towards better performers and scale efficiency. The timing could not be worse for smaller brands. China has more than 100 electric vehicle makers, even as total EV sales reached 5.46 million units in the first half of 2025, and a record number of EVs exported from China. Most of these companies sell fewer than 100,000 vehicles a year. Intense price wars have only accelerated the crisis. Fierce competition for market share led to price cuts of 20 to 30% through 2024 and 2025, squeezing margins across the industry. EV makers have been burning cash to fund research, new models, and international expansion, even as losses mount. And without new support, failure of quite a few of these firms appear increasingly likely. Even well-known names are struggling. NIO continued to post negative margins of around 31% on its premium vehicles through late 2025. XPeng and Zeekr managed to narrow losses in the third quarter, but still lost hundreds of millions of yuan, despite revenue doubling to between 20 and 31 billion yuan. Only a few giants stand firmly. BYD posted a $5.5 billion profit in 2024 on sales of more than $100 billion. Geely reported a 59% jump in profit in the third quarter of 2025, selling over 760,000 vehicles. With survival at stake, consolidation is now seen as inevitable. Analysts expect state-led mergers and acquisitions to cut the number of EV makers by as much as half by 2027.